Ladies and gentlemen, honey equals money. That's the bottom line of our presentation. How can something so sweet be something so profitable, sustainable, and fit the Justin's brand image very well? Hello, we are Checking M Consulting. The first letter of each of our first names, but it's something more than that. We're going to check your data once, twice, three times, as many times as we need to ensure that your data is helpful and accurate. Now, meet the team. I'm Nathan Goodbrake.
I'm Kate Sands.
I'm Henry Brown.
I'm Eleanor Shocknessy.
I'm Connor Swanson.
And I'm Ryan McVeigh.
And this is what we'll be going over today. I'm going to be doing the recommendation preview, and then the four aspects that went into our decision are the market attractiveness, the brand image, the financial attractiveness, and the operational feasibility. And then Kate will wrap it up with a summary. This is a chart that we made just to show that what went into our decision for honey. As you can see, there's a lot of green there. Honey equals money. The market attractiveness we thought as moderate, brand fit was high, and financial attractiveness and operational feasibility is high. But this is a good comparison to all the other products that we had to decide between and why we ultimately came up with honey. But each of our team members will go into all four of these aspects in more detail. Our recommendation is we want to introduce the new product, honey packets, to the Justin's brand. And why? Because we think the market is very stable. We think it has a great brand fit. We think it's very financially viable, and it's very easy to operationally execute. And I'm going to be passing it on to Maya, who's going to be talking about why we think it's markedly attractive.
Thanks, Nathan. Honey is an attractive market for Justin's because it offers a strong balance of size, growth, and competitive openness. The category generates approximately $1.23 billion in annual sales and is growing at a steady 5.2%, reflecting consistent consumer demand for natural and minimally processed sweeteners. While not the fastest growing category, which puts market attractiveness at a moderate ranking, this stable growth reduces risk and supports long term brand investment. The honey market is highly fragmented, with a private label controlling about 43% of sales and no dominant branded leader. Nature Nates has 10%, and another nine companies have single digit shares each, some with multiple brands. This structure creates a clear opportunity for Justin's to enter with a differentiated premium honey product that emphasizes ethical sourcing and quality areas where the brand already has credibility. As a result, honey allows Justin's to realistically capture meaningful market share and establish a competitive advantage within a sizable and accessible category. Market attractiveness isn't the only criteria that needs to be met, however. Honey must fit well with Justin's brand, which has only ever sold nut products. Next, we will have Ellen explain why honey is a properly fitting product to introduce into Justin's.
Thanks, Maya. So, when you think of peanut butter, you almost automatically think of honey. That's exactly why honey fits Justin's brand better than any other option. This isn't a stretch or a risky leap. It's a natural extension of something consumers already know and love. Justin's has even leaned into this pairing before with their half peanut butter and half honey packets, so the connection already exists in the consumer's mind, and launching honey simply builds on that familiarity. What really makes this idea powerful, though, is how well it aligns with Justin's values. Justin's is a vocal advocate for sustainability and bee protection, and at first glance, producing honey might seem contradictory, but that's actually where the opportunity lies. By entering the honey category, Justin's can lead the conversation around ethical and sustainable honey production, showing customers that it's possible to enjoy honey while still supporting healthy bee populations. And from a practical standpoint, honey also fits seamlessly into Justin's existing product lineup. It can be packaged in the same single squeeze packets that customers already recognize and trust. That consistency strengthens brand recognition, simplifies production, and makes adoption effortless. No new habits required. Overall, honey doesn't dilute Justin's brand, it reinforces it. It feels authentic, purposeful, and the next logical step in the brand's evolution. So now that I've explained why honey is a great brand fit for Justin's, I'll pass you over to Connor, who's going to go through the financial attractiveness of this brand extension.
Thank you, Ellen. So, as illustrated in the chart depicting the most important financial metrics, Honey generates a positive net present value of approximately $3.19 million and a strong internal rate of return of 43.04%, outperforming most alternatives in terms of relative efficiency. While Honey does not produce the most high cumulative cash flows by year 5, it achieves a payback period of roughly 2.7 years, allowing Justin's to recover its initial investment relatively quickly and reinvest capital into other growth opportunities. Although Honey's profit margin of 12.97% trails higher risk categories such as potato chips, which offer higher net present values and cumulative cash flows, this lower margin is balanced by faster capital recovery and a more predictable revenue stream. The reduced volatility and downside risk associated with Honey makes it perfectly attractive given Justin's brand positioning of natural, premium, and health-conscious products. From a risk-adjusted perspective, Honey delivers consistent returns while minimizing exposure to market fluctuations, making it a stable addition to product portfolio. Overall, Honey presents a compelling financial profile that emphasizes capital efficiency, quicker payback, and reliability over maximum returns, aligning well with a disciplined growth strategy focused on sustainable long-term value creation. However, all these forecasted metrics shown on the screen cannot be accomplished without operational feasibility. And to that, I'm going to hand it over to Henry, who's going to dive into operations.
Thank you, Connor. Supporting that Honey's operational feasibility is high and strong overall, the sourcing process is simple and reliable, since honey is easy to reproduce and widely available through well-established suppliers. This ensures consistency in supply and reduces the risk of disruptions, which is important for long-term operations. The manufacturing process is also very straightforward, with minimal processing and very few complexities involved. Because honey requires fewer production steps, it allows for efficient manufacturing while keeping operations low risk and easy to manage. This simplicity also helps maintain product quality and consistency as production scales. When it comes to logistics and distributions, little to no change is needed because existing systems already work well and can easily support this product. Honey can be stored and transported using current infrastructure while eliminating the need for additional equipment, training, or operational changes. On top of that, the cost is only about 50 cents per unit, which makes honey not only practical, but also very cost effective. This low production cost supports scalability and profitability while keeping operational expenses manageable. Overall, honey demonstrates strong operational feasibility across sourcing, manufacturing, logistics, and cost efficiency. With minimal challenges and high efficiency throughout the entire process, honey proves to be a strong and reliable option from an operational standpoint. With that, I'll hand it off to Kate to wrap things up with the summary.
Yes, now that we've gone over all the logistics of our pitch in detail, I'd like to close us out with a quick summary of all of our main points. Starting off with market attractiveness. Honey is a great opportunity for entry into a growing, highly fragmented market, meaning that there is no dominant brand leader, at least not yet. Honey provides customers with a clean, all-natural sweetener that is produced in a sustainable way. Moving over to fit with brand, adding honey to Justin's product lineup is the perfect opportunity to continue their advocacy for the bees and create awareness on how to collect honey in a way that is clean, sustainable, and harmless to bee life. Financial attractiveness. Honey creates a positive NPV and a strong internal rate of return. It pays itself back in as little as 2.7 years, and its profit margins are lower than alternative product options. Honey offers low risk, fast recovery of investment, and stable profitability. Lastly, operational feasibility. This product addition requires minimal changes across all areas of operations. Manufacturing is straightforward and distribution is simple. The current logistics of Justin's operations already supports honey, which leads to minimal costs and low operational risks. We believe that honey is the strongest brand extension option for Justin's. It aligns with Justin's brand missions and sustainability values. It's financially attractive with low risks, and there are minimal operational changes required. We seek approval for honey to be the next category extension for Justin's. Honey offers the strongest combination of brand fit, market opportunity, and operational feasibility. Approving the extension allows Justin to capitalize on a growing product while staying true to its mission of simple, high-quality ingredients. We'd like to leave you with this quote from Justin's founder, Justin Gold himself. Food should not only be good for our bodies, but also for our natural environment. A honey brand extension is a great option to carry out this message and stay true to the Justin's brand. From all of us at Check-in Consulting, we thank you for your time and thank you for listening.